anybody's time. There you go. Okay, and I'm excited to have Taylor here. We're going to be talking about investor lending and private lending. And I know we've been talking about this a lot. I see Carl, Michelle on here going through what options that we have with investor lending. So we work with a lot of investors, and this is going to be huge for us. And also, as we build our portfolios, we want to know what the options are. So Taylor here we're excited that he's come out to help us with this. Just going to go over a brief overview of his products, tell him about himself, and then we can ask questions and discuss what's in the industry. So I'll go ahead, Taylor, and you can take it off from here.
Awesome. Thanks, Nadia. How's everyone doing? So yeah, my name is Tyler Campbell. I live in Florida, Southeast Florida, specifically near West Palm Beach. Live in a little town called Boynton Beach, Florida. So I'm very familiar with the whole state. I've lived all over the place. My old boss lived in Tampa, and I used to work sales in the whole west coast of Florida as well. So I'm very familiar with your area where all of y'all are located. It's lovely. I love it up there. So yeah, born and raised in South Florida. Both my parents are actually from Florida as well. So big Florida guy over here. But so I work with a company called Optimus Capital. We are a nationwide private capital lender. We're probably a little bit different than some of the other private lenders you may have spoken to or worked with in the past. We are what's called a hybrid correspondent lender. So what that means is we work with 5 of the largest private real estate capitals in the United States, among a bunch of other smaller ones, and also some of our own money, which is growing as well. So what that means is we have extreme flexibility with underwriting. We can always get the deals funded. A lot of times there's little hiccups that arise in these private loans and hard money loans because they're just not straightforward. We are able to pivot very easily and make sure that the deal continues forward and closes on it, in the timely manner and the time that it was supposed to. Yeah, so we just have extreme flexibility, and it just makes us a really unique place to do business, and kind of help streamline everything that you guys are doing. I'm assuming by the name Investing North Florida, you guys work with pretty much mostly investors. Obviously there's probably single family homes just for, families and stuff like that you you like to work with as well. But investors, it sounds like, are your bread and butter. Those are our only clients. So we only work with real estate investors. We only do non-owner occupied business type investment loans. So we're not going to be able to do anything if it's a second home, a vacation rental, or a vacation home for the clients. It's got to be a non-owner occupied investment loan. With that being said, we've been around for about 10 years. We are based in Sacramento, California. That is where the CEO lives. But like I said, I live in South Florida. I work with clients all over the nation, a ton in Florida. But 95% of our business is actually from repeat and referrals because we take such good care of our clients. We offer that white glove treatment that can be hard to find in this space. So we like to build long-lasting professional relationships. We're not looking to do 1 or 2 loans with a client and then never talk to them again. We want to do every loan for your clients or yourself. If you guys are investors yourselves, we want to do all of your loans, streamline the process, make it as easy as possible for you, and take all that burden off your back so you're not shopping around like crazy with a chicken, with your head cut off. You know that you can come to us. We're going to take great care of you. We're going to give you the best rate and terms out there in the market, the most competitive. Yeah, so that's kind of who we are and what we do. I'm always on call. Right now I'm working like 7 days a week, just trying to grind away. I'm taking calls on Sundays. I'm sure y'all are showing houses and working all weekend, as the real estate industry never sleeps. It's slammed on the weekends. So I'm always available for a phone call. I'll follow up with an email after this call. I'm sure Nadia will share all of your emails with me, and I'll send you like an overview of of everything that we offer. But we'll get into that right now. So some of the products that we offer, the programs. First off, we'll talk about fix and flips. I'm sure that's a big one with y'all. So fix and flips, with the first thing that we're looking for is experience. We want to see that the client has experience. If they don't have any experience, that doesn't mean that we can't get the deal funded. So keep that in mind. We can definitely do first-time flippers. We have programs for everything, but for ease of transaction and for rates and everything like that, we're looking for experience. When I say experience, we are typically looking for flips that have been done in the last 3 years. A lot of times purchased in the last 3 years and either sold or refinanced within the last 2. If your client has met those guidelines, we can get them the best rate and term possible, and they will be considered a platinum or a pro borrower. So that will just help speed things up. It'll make sure guarantee that they get the best rates, and they will receive 90% of the purchase price and 100% of the rehab, up to 75% of the after repair value, the ARV. Make sense? So we don't, there's a lot of private lenders out there, hard money lenders that, are like, hey, we'll fund 100% of the purchase price, 100% of the rehab. That's fine and good for them. We like to work with investors that have a little skin in the game, because it takes a little bit of the risk out of it. They're going to be more inclined to get the project done in terms that we have set out. It's a better experience for everyone when they have some skin in the game, especially as an investor. So we don't do anything that's 100% funded. Like I said, we'll fund 90% of the purchase price and 100% of the rehab, as long as they have all of that experience and decent credit. So we want to see credit that is, hopefully in the sevens. 720 or up is a good credit. You're going to be able to get the best rate in terms with that. We can still work with credit as low as like 660. Anything lower than that is going to be it's going to be hard to work with. I have an amazing credit repairman that I can share with y'all as well. It's crazy how many people I run into, and I'm sure you guys can say the same thing, where their credit is just in the tank. So that is very important. The money you can save long term from building your credit and getting it up in the sevens is just going to save you money exponentially long term. For an investor, it's a no-brainer. So without that kind of experience and credit, it's going to bring your ARV down a little bit. So it might bring it down to 70% or 65% of ARV for the total loan value. And that might bring the purchase price down to about 80, 85%, maybe 75%. And a lot of times we can still fund 100% of the rehab in those circumstances.
For those, does that go out for, when you're saying the rehab, is that out in draws as well?
We can do it different ways. Like I said, we've got different programs and options. So most of the time, yeah, it's like they provide us the scope of work. They complete a portion of that scope of work, and then we give them the draw for that portion of the scope. And then they pay interest as drawn, Dutch interest. So yeah, they won't pay interest on that rehab portion until they draw from it. We also have options for advanced draws, so they can get the whole rehab budget or portions of the rehab budget advanced to them.
Oh, wow. Okay.
Yeah. So we have those options as well. We also have options where they can roll the interest payments into the actual loan itself. So there'll be no payments at all until the loan is due. They will end up paying more interest because they're going to be paying interest on top of the interest because they're rolling it into the loan. But it's cash flow is the name of the game in this industry, right? So if you can keep that cash flow high, and keep keep that liquidity high as possible, it makes a lot of sense, because then you can spread out your liquidity and do more flips, buy more rentals while you're working on this other project. So the hard money math we have actually a whole video on hard money math that I can share with y'all as well. That kind of breaks it down to really talks about the return on investment of using hard money versus private money, or mom and dad's money or whatever. You just get a lot higher ROI when you're using hard money, just because you're able to spread your liquidity out and do more. Speaking of liquidity, we also do we look at liquidity on the flips. They're going to need enough to close, obviously, and then sometimes up to 6 months of reserve payments, a lot of times 3 to 4 months. Just depends on their experience, credit, and the deal. Everything is always deal dependent as well. We got to look at the property. We got to look at the ARV. There's got to be decent margins. Everything's got to make sense for to tick all the boxes.
Great.
Any questions on fix and flip?
Yeah, what's the low end to the high end that you guys would consider?
For loan size or
loan size? Yes.
We typically, the 75,000 is the lowest total loan size that we will do. 75,000.
What's about that? How about the high end?
Oh, high ends in the millions. Yeah, it's potentially up to 20 million. It's a case by case basis at that point.
Very cool.
Any other questions? Our rates right now for those well-qualified buyers are in the 10s at max leverage. Should have brought that up. But typically we're going to see rates in the 11s, maybe low 12s. Those where our rates are. That's where our rates are right now. That is pretty standard and actually very competitive for the market right now. You might come across some mom and pop handshake money where they're oh, 3 points and then 6-7% or whatever. We're not going to charge 3 points. We're going to average around 2 points. We can adjust that as well depending on the deal and what makes sense for everyone. We have fees and underwriting and legal and stuff that we have to cover. But other than that, we do have some flexibility there. What else? Most of those flip loans they're almost always going to be a 12-month term. We do have options for 18, 24 months that might hike up the rate a little bit and change things up, make it a little different. But we do have all of those options. I don't know if any of y'all have worked with the fix and flips before, but if it takes them 1 month, 2 months, 3 months to complete the job, as soon as they exit, they sell the property or they refinance. That's it. They don't, there's no prepayment penalty.
That's good.
Yeah. I'm working on a scenario with this lady in Myrtle Beach right now. It's a really good deal. It's a 15-bedroom triplex, vacation rental, short-term rental on the beach. And she wants to do some rehab to it. She wants to put 50 grand into it. And we're hoping that it's going to boost the ARV $400,000 or $500,000 just by putting this $50,000 into it. Well, what we're hoping for, and ideally, is that when the appraisal comes back after she finishes the rehab, her ARV is going to be the $400,000 or $500,000 more. She's going to do a cash out refinance after the fact, and it will actually put money back into her pocket on the back end. And then she will, if you actually do the math, she will only be coming out of pocket 8%. When she has to come to the table with this loan, she'll have to come to the table with about 12% in the beginning. But when all is said and done, we're hoping that she's only going to be coming out of pocket 8%. And this is on a $2 million property. So there's really fun, creative ways to work with hard money where you can do things like that. And instead of going straight into a DSCR rental loan, if you want to do some rehab, boost the ARV, get a cash out refinance, put some money back into your pocket and minimize how much you actually had to put down overall. It's a fun way to work with it. So there's really cool, creative options like that. So
with these loans, do you report to their credit as well? Because I know in the past we've had some of the small loans like this where then you go into the refinance process and they say, well, I don't see that you've been paying on a mortgage. So you own the property, but you haven't been paying on the mortgage and it causes a problem in the refinance. In here, you're actually making payments. Do you report to the credit? Do they report to
So
the
it's not reported to your DTI, your debt. Yeah. So it doesn't affect your credit.
Okay. Have you had trouble with going into the refinance afterwards with these?
Only if the client has terrible credit because of other circumstances.
Okay.
Nothing to do with the loan themselves.
Okay.
Yeah.
Okay.
No, they don't affect your credit. I mean, the only time they affect your credit is when we do a hard credit pull. And it might just bump your credit down like 5 points for 2 weeks, a month, and then it'll bounce right back. Just the same way you guys do your credit pulls. It doesn't really do a whole lot. So,
Okay.
but on the fix and flips, we actually can do a lot of them with a soft credit pull. So we're not even doing a full pull on that, and so it doesn't touch the credit at all.
And really, they're flipping it, so they're selling it anyways, and they're not really looking to refinance.
Yeah, so we've got options. But we do have other options. Like if this option doesn't work, we can bring it to a program, and they might require a hard credit pull and also an appraisal, whereas the other program might not require appraisal or inspection or anything like that.
Okay. Very
Cool.
cool.
Let me see if I missed anything. And I have templates for all of this stuff. Like when we're talking about experience, I have like an experience tape template that I can send out to y'all, where the client would need to fill out, and we would need the HUDs, everything like that to be able to verify their transactions. I've got like a scope of work template. I mean, I've got everything. So
Yeah, that's good to know, because a lot of times when we're working with these investors, you're kind of running into it. You're like, well, what do we need? So that'll be good that we can partner with you on these.
exactly. Yeah, I've got detailed lists and templates for every scenario.
Perfect.
Okay, so we'll move on from the fix and flips. Our bread and butter is probably the DSCR rentals. We do a lot of fix and flips, but the DSCR rentals, long-term and short-term rentals, they're just a little bit easier sometimes. And we really do have like the most competitive rates and terms in the market because we have so many options. No one really is going to have a better rate and term than us. I mean, there's someone out there might match our rate, but it's going to be hard to beat ours because of all the programs and options we have available to us. So typically with the DSCRs, if you're looking at a purchase, just a standard rate and term purchase, we're going to be able to do up to 80% LTV, loan to value. In the past, we were able to do 85%. Those days are kind of behind us for now. We'll see if that comes back. No one out there that I know of is doing 85% purchase. So just keep that in mind. So they're going to have to come to the table with 20%. We can do the long-term rentals, short-term rentals. We can do a short-term rental as a long-term rental if it makes sense to get the rate down a little bit, because a short-term rental typically will come with a little bit of a bump in the rate. So some things that we need when we're talking about the DSCRs, credit is number one. We don't care about experience as much because we're looking at the DSCR, and DSCR stands for debt service coverage ratio. So it's basically just taking the rental and dividing it by the PITIA, and it's got to be hopefully above 1. We have options where if it's below 1, we can do like an interest only option, like a 10-year interest only option, stuff like that. But ideally, we're going to want them above that 1.0 DSCR. So we're going to need the credit. We want the address, purchase price, market rent. We want the as-is value. We need taxes, insurance, and an association fee if available. And then if it's a short-term rental, we want to see the income history if it has it. So if they're buying like an Airbnb property from someone else, we're going to want to see that. If not, we're going to need to pull from like AirDNA, and we'll do a projection report on that and figure out exactly where the short-term rental market is for that property. Like I said, we can do 80% on the purchase side. For cash out refinance, we can do 75% loan to the appraised value. So we can do a 75% cash out on that. Like I was saying earlier, with that lady in Myrtle Beach, she's going to hopefully bump up the ARV, the appraised value, $400,000 to $500,000, and do a 75% cash out, which will end up being 92%, hopefully 92% of the original purchase price. So yeah, just creative way. Right now, rates on DSCRs are low, starting at like the low 8s. I just priced one out for someone who is coming to the table with 25% down, and the rate is like 8.06 right now. That's what I just priced them out at. I also gave them the option for 20% down, 80% purchase, and that rate is around like 8.5, 8.6. That is just today, here and now. Obviously, you know, things are crazy and fluctuating all over the place. We do have options to buy down the rates as well, like a 2-to-1 or a 4-to-1 option, where if you add a point, say at a half point or a point, it might lower the rate by 0.25%, 0.5%, depending on the buy down ratio. So yeah. So I think the floor that we can go with that is about 7.6 right now with the buy down. So if they're looking for a long-term, you know, just getting their rate down as low as possible, getting that cash flow up monthly, we can always buy down that rate. So we have options on the DSCRs ranging from 5-year fixed all the way to 30-year fixed. Our most popular is a 30-year fixed amortized. We also have a 10-1 interest only available, meaning they pay, you know, interest only for 10 years, and then it goes to a standard amortized loan after that. We can do, like I was saying before, the DSCR, we can do all the way down to a 0.7. We would just have to qualify the property, make sure that there is no other debt service options available, and we could work with that interest only option to get them up to get that 0.7 up to like a 1.0 or a little bit higher. We can do, like, if you have a client that's got a bunch of loans or a bunch of properties that he wants to refinance, we can talk about a portfolio, which I'll get into in a second, or we can take them all to one of our programs and we can, you know, do them all separately at the same time and really reduce the fees up front. So just keep that in mind. All right. Prepayment penalties on the DSCR. Typically, we're seeing a 5-year descending. So 5% in the first year, then 4, then 3, then 2, then 1% throughout the 5 years. I don't know if you guys see that out there in the industry, but that is typically what we're attaching to ours. We do have options for a 5.55, like all the way through 5 years. That will actually lower the rate a little bit, is if they're not worried about a prepayment penalty in the for the next 5 years. We also have the option to remove any prepayment penalty or do a 3-year prepayment penalty. It's going to bump the rate up, and that's all going to depend on the situation and the deal.
Yeah. Okay.
Makes sense. So yeah, 5-year will typically be about 0.25 to 0.5% lower on the rate, like a 5-year straight through. And then the no prepayment penalty or a 3-year prepayment penalty will be a higher rate. Okay. Any questions about DSCRs? Does anyone have any rental investors out there that need pricing right now?
Yes, we do have a few that are looking at this product. So to refinance that, especially with the Airbnb, trying to, with everything's happening with Airbnb. So looking at refinancing to pull out to get something a little more secure. So yeah, we are always looking at the DSCR loans. So this is a great option. 8% is really good. And you said 8% 30-year ARM. Is there any 30-year fixed or?
Yeah, no, 30-year fixed. Yes, absolutely.
Okay.
That's our
Okay,
most
so-
popular.
Yeah, definitely.
Yeah.
Well, that's a great option. So we'll be definitely talking with you about those loans as well.
Yeah, absolutely. We always have the most, we'll be right there with the most competitive guy out there in the industry, if not better. And
Good.
and if something comes across our desk and it is better, please bring it to me. I can potentially fight for the business, and there's always exceptions and things that we can do to make it happen. It might not always happen, but it's good to try, and it does happen. So
Good.
yeah. I was just gonna say something else, but I can't remember. All right.
And Malik did have a question. He was asking, what if you are looking to house hack, and because you're saying you do mostly non-owner occupied, and if you're looking to house hack, I think that and just to answer Malik's question, I think, and you may be able to help us with that answer, is that FHA conventional is the better way to go. The interest rate's just lower, which is kind of the whole point of the house hack. So, but so house hacking will be more conventional, but with your program, this is awesome because you can keep building that portfolio.
That's the idea. Yep. Exactly. Yeah, it's all strictly non-owner occupied investment business type loans. Cool. So yeah, those are our two main ones that we work with a lot. So fix and flips and rentals. We offer portfolios as well. They're similar to the DSCR rentals. Rates will be a little bit higher with them. We don't recommend the portfolio loans until they get like maybe above 10 properties that they want to put into one portfolio loan, or even more than that. We can do a rate and term up to 80% as well, just like the rental loan on the portfolio loan. And we can also do a cash out refinance up to 75% on the portfolio. There's also, say they put 10 properties into a portfolio and they want to sell one, they will take a hit on that. So they will actually have to pay 120% of the remaining balance, which will actually go towards the total balance of the remaining portfolio. But they will take a little bit of a hit on the front end when they are selling that when they are selling that property. So just keep that in mind. So they're not always the best options. They're a good option for investors that have a lot of properties, and mainly because they can make one payment as opposed to 15, 20, that
makes sense.
Yeah, it's a lot of time saving and just ease of transaction and stuff like that. So
it probably actually saves in the long run with having everything bundled.
Exactly. You save a lot on you save a lot on the front end with the fees and stuff as well. It's advantageous to the investors that are like, this is their portfolio. They're good. They know that they're going to be holding onto these properties for a long time. They're going to pass it down to their kids and their grandkids, stuff like that. It makes a lot of sense. But if it's an investor who's jumping around and has a bunch of properties and they're buying and selling, it's not a good idea.
Smart.
Yep. So past portfolio, did anyone have questions about the portfolios? No, they're very similar to the DSCRs, just one big one as opposed to 10 small ones. So past that, I mean, we do new construction as well. We can do up to 20, 30 million plus development style deals. Everything is very case dependent on that. I mean, that goes under a microscope. Experience is more important than anything. It's for that. Like if the investor doesn't have any experience in a ground up construction, even just a single family home, we're probably not going to be able to do it. They're going to want, we're going to want at least one ground up construction completed, tied to their name. And when I say tied to their name, typically they have to be on title. So their name, their LLC, their GC company, typically their name has to be on that title. Makes sense? That's the only way we can really prove that they had their full skin in the game. They got the job done. They completed it. They exited with a profit, and it was successful. Because new construction, especially ground up new construction, it is statistically the riskiest of all of the investment type loans. So we just
So
want
this is primarily for contractors to build for somebody else, right? So you wouldn't be able to do that for owner builder.
no,
Or
we
could you?
absolutely can. Yeah.
You can. Oh, okay.
Oh, like owner builder, like someone building a house for themselves. Oh, no, sorry. I thought you meant like the owner is the builder and they're okay. Yeah, no.
Oh,
Yeah.
then yeah.
Mhm. No, we can't do
Okay,
that.
that's good to know that you have those though, but it needs to be a general contract. They need to be licensed.
Well, they don't necessarily have to have the GC. Like, someone else could have the GC. The person that the actual guarantor on the loan will have to have had experience. And when I say experience, they have had to have been on title for a previous like kind. So something very similar, whether it's a single family home or 20 units complex, multifamily complex, or track home, 50 unit single family home community. They would have, we need to see similar experience. What are the terms for the new construction? Similar. Yeah. So they're similar to the fix and flip bridge loans. So they really basically are a bridge loan. We can offer up to 85% loan to cost, like near major metro areas. So something I actually forgot to add with the fix and flip, as well as location, is also important. So if it's something that's really rural, if it's out there in the sticks, we might not be able to do it. Same thing with new construction. It just becomes a lot more risky. So with that being said, 85% for the new construction loan to cost for builders in metro areas, so suburbia or near a city. This goes up to, we can go up to 75% of the ARV, so after repair value, which is just completed construction. We can offer up to 70% of the initial land cost, as long as the total loan does not exceed 85% loan to cost. What else? We've got like full calculators for all of this stuff as well. So like I said, we put this under a microscope. The terms for like the length of time, typically 12 to 18 months. These get stretched out longer. We can go up to 36 months on the new construction loans. And like I said, they're very similar to a fix and flip. So, the builder is building it and hopefully they're trying to sell it. They could also cash out refinance, or do a rate and term DSCR refinance, or a conventional mortgage if they want to. It doesn't matter. But yeah, they're all bridge style loans. Any questions on that?
No, don't. That looks good.
Okay. And the rates for the new construction are similar to the flip loans as well. So starting in the 10s for like very experienced builders, going up into the 11s and 12s, possibly 13s for now.
And really, we don't have too many of those right now that in our pipeline, but when they do, that'd be very nice to have.
Absolutely. Yeah. There's something in your back pocket, but always ask about experience. So that's going to be the most important thing with new construction. Credit also helps, but experience is going to be number one.
Yeah. Very cool.
Well, that's pretty much, well, actually, sorry, we do commercial properties as well. I don't deal with that too much, but definitely bring it my way. We can do mixed use, multifamily, and yeah, the DSCRs, anything like single family home actually goes up to like 1 to 4 units will qualify as like the same type of loan. Anything above 4, so 5+ units, will be considered like commercial multifamily. So we can do all of that. My friend just did a 20 units. He's working on a 20 units complex right now in St. Pete. My buddy that works for Optimus. Let me see if I can pull something up here.
So how long have you guys been in Florida, funding Florida, the company itself?
All 10 years.
10 years.
So Max Boyko is the CEO. and founder of Optimus Capital. He actually was a real estate investor himself, and still is. He owns quite a few properties, but then he started getting into the private hard money space and realized, like, he's like, wait, this side of the industry is like less work and, you know, can be more lucrative. Depends what you're good at. Like, some people are more hands-on, and he realized that he was just better on this side of the industry. He still does his own deals as well, like in addition to this, but he focuses mainly on the hard money, private money lending. It's just it's where he sees himself, and it's where he's amazing at it. So yeah, his name is Max Boyko. He's just he's probably about, I think he's like 40 years old. Does very well for himself.
Mm-hmm.
And just really, really easygoing guy, very, very calm and knowledgeable, and someone that's great to work with. And that's just kind of how everyone is in Optimus Capital. Everyone is really knowledgeable, easy to work with. We have our own underwriters in staff, our own processors. We have our own legal. So that's what, when I was talking about earlier, like we have all these programs and options. A lot of other private lenders, they will take these loans to a specific fund, and they will use their processors and their underwriters. And if it gets kicked back, it's just like, hey, you're shit out of luck. Like, we have our own underwriters and processors that are working on these loans with our funds that we work with. So if something comes up, they let us know. We're like, hey, you know, we give the investor a call. Hey, we have to make some changes. Is that okay? We can still move forward, and we continue the process.
Very nice. Speaking of that, how long does it normally take to get through, say, a fix and flip or a DSCR loan? What is your standard turnaround time?
It's a good question. So it depends.
Yeah.
If it's someone that we've worked with before in the past, like someone who's done a few fix and flips with us and they have a lot of experience, I mean, we can get there. We have options to close in like a week. That's not typical, but it's happened. And we do make it happen, you know, on occasion. But typically, like a new client, a DSCR and a fix and flip, anywhere from 3 weeks, 21 days to a month, maybe a little longer.
Yeah, because the DSCR loan needs an appraisal as well, right?
Yes, yeah, they do. The only one that's not going to need an appraisal is just one of our specific programs. It's for the fix and flip, and that same program also, we don't require. We're talking about appraisals, right?
Yeah.
Yeah. So that we don't require appraisals, yeah, or inspection.
Okay, and with them, can you use your own appraisers, or do you send them out?
Either or.
Okay.
Yeah, as long as they're licensed and good to go, we can use either or. And if if there's already been an appraisal, I think they're good for 90 days, right? Is that
about 90 days.
So we can use an appraisal that's already, if you guys already have an appraisal, we can use that. Okay. As long as it's within 90 days. Cool. And back to the commercial multifamily real quick. They're similar to the DSCRs. We can do a purchase, a refinance, cash out, and we can go up to 85% LTV on those for the purchase and the refinance. The cash outs are going to be a little bit less. Sorry, I was just pulling something else up. So that's pretty much all of our programs. A really cool company policy that we have for referrals, especially for real estate agents like yourselves. We offer 20% referral fee from the origination. That goes, we wire that directly to you after the deal closes. So it could be a nice little side revenue stream for you just by connecting us with your investors. And, you know, you guys might be your deal and you guys close on the property, you make your commission, and then you get a little kickback from us on top of it. So
yes, because you're not doing FHA or conventional, so you can
we're allowed to do that.
So 20% of the lending fee, so whatever you receive, it would be 20% of those.
Yeah.
Gotcha.
That's correct.
Very handy. That's very nice. Like it.
Yeah, it can add up to quite a bit.
Yes. Very nice.
Absolutely. We also have really cool other cool programs. Like we have this Home Depot program where if your client closes on a fix and flip loan with us, they will get like a code where they can receive like 25% off of Home Depot purchases. We have just a couple cool things like that, but that's the best one that we offer. 25% off like all of their Home Depot purchases. It also adds up to quite a bit.
That is very nice. And is that
had
because did you guys partner with them, or is it because now they're into doing like the investor side of things, or how did
it's a partnership. Yeah.
Partnership with Home Depot.
Yep.
Very cool.
Yeah, we just had a company-wide call, and Max just told us that he actually can, like, when every time a contractor or the investor uses that code, it actually comes back, like we're able to see like how much money like was saved, and that 25% equated to $350,000. So from just our clients.
Very nice.
Yeah, so it's just a cool little relationship building feature that we offer. So yeah, and a lot of the documents that we receive in the beginning are like one-time documents, and then once we have them, we keep them, we save them, like your license, applications, stuff like that. And it really just makes, like, in the future, like when you want to continue and get another loan, another fix and flip, another rental loan, it's just going to make it that much easier, that much faster. Process is streamlined with us, and that's why we like to say that we're a relationship company, because we are all about working with clients, repeating business with the same clients and continuing that relationship, because we all know these savvy investors out there, they're not just buying one or two. A lot of them are buying one or two a month. So those are the clients that we like to work with, and those are the clients that like to work with us. So
very nice. Yeah, and I know most of our agents here too are trying to build their portfolios as well. So I know Carl specifically, he's ready to get going, and a few of us are starting to build our own portfolios. So it's going to be a good partnership there.
Absolutely. Yeah, I'm looking to do the same myself. I right now, this little house that I'm in, I bought this like a couple of years ago. It's just a little 2-1, but it's really close to the ocean here. I want to turn it into a rental in the next year or so, and yeah, keep moving on up. But I definitely want to do some DSCR stuff for myself, because it's really cool what you can do.
Yeah, absolutely. Yep. And we do host. So when you're ready to put it on Airbnb, we can definitely host it for you.
Awesome.
And we have some agents here that'll help you buy the next one. But do you guys have any questions at all about the investor lending and what opportunities he has?
Yeah, I had a quick question about the new construction. I know you briefly talked about it as far as experience. They need to have something showing experience within the last, I didn't get the time frame. Was it the last 2 years, year?
New construction lasts 3.
3? Okay. And they need to have their name on the deed, or is it their name, or their let's say a corporation, that if you can tie it to them and see if they had a corporation as well. That was
Yeah, either or, but I mean, likely it's going to be their corporation.
okay. And any dollar value, or it doesn't really matter?
It just has to be like kind. We like to say, it has to be similar. So if they're building a single, 3-bedroom, 2-bathroom, single family home, we want to see that they've at least built like, a 2-bedroom, 1-bathroom, single family home, or bigger or smaller, something very similar in that scope of work.
Okay.
Yeah.
All right. Sounds good. Thank you.
Absolutely. Appreciate it.
Yeah, we'd really be interested in getting your credit repair guide too, because I know a lot of people are, shifting things around. So that's always a good bonus. And you said on the regular private lending, no payments until loan is due. What's the longest loan? Is it like 12 months, or
you're talking about a fix and flip, rolling the payments into the loan itself?
Yeah.
The longest we can do with that specifically, I think it's 24 months.
24. Wow. Okay.
Yeah.
So 2 years.
You're going to pay a lot of interest on that.
Yeah, that's a
rolling those
hefty one.
payments in for 24 months. I'm texting, I actually just texted you our credit repair guy. His name is Dennis Platskin.
Perfect.
Yeah, he's I think he lives here in Miami, Florida.
Great.
Awesome.
Yeah, well, this is really good. This is really good information. I'm excited to partner with you on this, because there's going to be a lot of these coming up, and this is going to help us. Especially we're have a few that are listed that are short-term rentals, so we can also promote the buyers to go right to you on those as well, especially for DSCR loan or however they're going to purchase it. So that's very good.
Awesome.
Anybody else have any questions? Michelle, Jessica, looks like a few might have dropped off. But if you guys have any questions.
No, I'm good.
Just keep in mind, you know, rates are fluctuating right now. No one knows what's going to happen. Don't let that discourage you. Savvy investors always invest.
Mm-hmm.
Where there's cash flow to be made, where they can, you know, make some margin, get some cash flow on some rental properties, they're gonna do it. Right now, we're at like historic average. So I know we got spoiled there, 2, 3, 4% for a couple of years. I got my house in the 3s. I'm stoked. I'm never, you know, that's staying there. I have friends that are my fiance's dad has got like $1 million house at like 2.1 or 2.25. Sorry. It's insane.
Yeah.
We're probably never going to see that again. So, you know, we're at that historic average. My parents bought their first house, I think, at 16%. And I know you guys know all this, but I talk to investors every day that do not care that the rates are where they are. They're like, oh, 8%, it's fine. I don't care. I'm charging this for rent, or the ARV is this, and we're gonna make it happen. We're gonna find a way. And it's their livelihood. It's, you know, it's how they make a living, just like I sell private money, and you all sell houses, and or, you know, are also building your portfolios. The investors, it's what they do, and they're savvy and they're smart, and the cream always rises to the top. So just keep at it and stay positive. And yeah, I think we're going to be fine. It's an interesting time ahead, next, you know, with everything that's happening, and then next year's an election. I think it's going to be a good time for investors to jump back in. So
Absolutely. Yeah, and as the rates keep climbing, I mean, that's what's keeping from having the prices climb as well. So a lot of savvy investors are buying now, so they get the prices low to refinance it later. So there's a lot of savvy ones out there that are still working and still buying and selling. So no, this is really good, because there's a lot of people that keep asking about this type of funding. So I'm excited to have a new partnership with you, Tyler, and especially with that 20% referral fee. That's going to be really good.
yeah, it's pretty handy.
Yeah, definitely help us with those seller gifts.
Absolutely.
All right. Well, thank you so much, Tyler. If anybody has any more questions, just let us know. And what I'll do is I'll put your contact information into the WhatsApp group, along with the credit repair guy, so that they can get access to that as well. But I'd love to stay in contact with you. We can talk again and get in front of the agents, maybe quarterly, just if there's anything new, or, you know, that way you can let them know what's coming up in the industry and keep us knowing what's on the other side as things change. So
I'd really appreciate that. Yeah, that'd be great.
Yeah.
And also, if you can, I don't know if you're able to like send me an email with everyone's email, so I can respond to that with our just like our Optimus Capital overview, and then they can respond to me with specific scenarios or whatever. I have like email templates for everything, for, you know, fix and flips that have all of our docs list with attachments, and DSCRs that I can send out really quickly that they can have handy if they need.
Absolutely. I'll send you an email of everybody's email that's on here, and the ones that couldn't make it either. I'll make sure they have that. And yeah, love to stay in contact. So I also can put you in one of our groups that'll keep us active as well, so you can see what's going on.
Amazing.
Awesome.
Somebody else,
Thank you.
Malik asked a question. I don't know if do we answer that one? I just pulled up the chat. I didn't see it.
Yeah, we did. I asked.
Oh yeah,
it
that was the
earlier.
house hacking one. Yeah. Okay.
Yeah. So we're good there. He had to leave early, but yeah, about the house hacking, so that's perfect.
Yeah. All right. Just wanted to make sure I answered everyone. All right. Well, thank you so much. I look forward to hearing from you, and bring me some deals, y'all. Let's
do it.
business.
Yep. Sounds good. All righty. Well, have a good day.
Thank you so much.
Yeah. Thank you for your time.
Take care. Enjoy this weather.
Yes, definitely.
Yeah.
All right. Bye.